The S&P 500 dropped almost 3% yesterday. NASDAQ 100 dropped almost 4% yesterday. Nvidia's down 22.65% for the year. Tesla's down 41.43% for the year. Palantir's dropped almost 35% in just 1 month. What the heck is going on? One huge thing that happened yesterday was that Trump said that he wouldn't rule out the possibility of a recession. There's also literally a theory that Trump is tanking the stock market on purpose, and I'm definitely going to go over that. The whole market is flashing not only fear, but extreme fear in the Fear and Greed Index. Of the 7 different indicators, we're showing extreme fear specifically in the market momentum, extreme fear as far as stock price strength, stock price breadth, extreme fear in put and call options, market volatility, and even extreme fear in safe haven demand. There's a lot of reasons why this stock market is dropping and dropping fast, and why I think that this is going to continue to happen for the foreseeable future. But this is not a doom and gloom video though. This video is to keep you on track. I know that I'd probably get more clicks or probably higher view time if I kept going on and spreading the fear and showing you how this is the scariest thing ever, because that's going to make you watch longer. But I'm not going to do that to you. I'm going to tell you straight up because I'm here to help. That's why I made this channel. I'm going to tell you the truth, and I'm going to tell you what you need to know. I'm also going to break down a couple of comments that Tom Lee made that are pretty interesting, especially about where he sees the market going in the very near future. I'm also going to tell you how I've been investing just in this past couple of weeks and how I plan to invest over the next couple of months. I'm also going to highlight the 3 main reasons why this stock market is down so that you can keep an eye on this yourself, so that you can be better informed, so that you can make better decisions for your portfolio, and so that you can be safe. If you think things are going to get worse before they get better, I'm definitely with you. My name is Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified. So there's 3 big reasons why the market might be crashing. First is the tariffs, or actually the lack of tariffs. Or actually no, the tariffs are back on. It's this big game of cat and mouse, but what it's really doing is causing so much uncertainty in the stock market, and the market hates uncertainty. Those tariffs would definitely cause delays and would mess with the supply chain, but I think the hype is much bigger than what it could actually happen there. The second reason is just this idea that everyone kind of felt like last year, even the year before, that stock market was way too high. We hit all-time highs like 20 times last year. So when any bad news hits the market this year, people freak out like 3 times harder because they see it and then they say, oh yeah, this is the big one, let's brace for impact. What they're really doing is overcompensating each time and making a very emotional decision for something that could just be a small short-term thing. But the biggest thing, and reason number 3 why the market's tanking right now, has to do with President Trump. He randomly just came out and said like, oh yeah, I don't rule out a recession. Who says that in their first couple of weeks being a president? You want to appear strong, you want to appear like the market's strong, if that's something you care about. Unless there's another agenda. Check out these clips Pomp put together.
I've been saying, let's get interest rates down. Nobody ever gets rich when the interest rates are high because people can't borrow money. Interest rates are going down. You know what else is going down? Energy's going down. I'd love to see energy go down.
Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
You can't go by that. You have to do what's right.
When Trump was running, and then right when Trump was elected, he was very outspoken that he wanted the Fed to reduce the rates. And since the stock market's been so strong, and since our reports have been so strong, the Fed has said we're going to pause taking down the rates, and we're just going to keep them the way that they are. Well, now Trump just might be crazy enough to force their hand by threatening the tariffs, knowing that that will rock the market, and then by going out and publicly claiming that we might have a recession, knowing that would spook people out of the market as well. He's fine with a momentary stock crash, as you kind of saw on the video there. He's looking at the big picture, not this little short-term thing. The big thing that he's dealing with, especially this year, is dealing with our overall country's debt. This year in 2025, the US Treasury will need to refinance about $7 trillion of maturing debt. The best way to do that is to have low interest rates. The same way when you buy a house, you want the rate to be as low as possible so your payment is lower each month. He's doing the same thing. If we have to pay that back at high interest rates, That's going to be an issue. So he wants to bring the rates down so that we can deal with this debt a lot easier as a country, which is kind of why I see merit to this whole conspiracy theory that Trump might actually be behind this momentary stock market crash. Here's the thing, everyone. Companies are not dying. Companies are not showing substantially less profit than like a quarter or two ago. Efficiency is still high. Inflation is getting better. All of these things make me think there's no real reason why the market is dropping in price. So all I see is a lower price for something that's still valued at the same in my brain. So if I can buy something that's cheaper for the same value, I'm definitely going to do that. This is just a market correction, but might turn into a market crash due to the extreme fear and the emotional response from the American people so far. So I do think that this will end up being a crash, and I do think that it will last a little bit longer. At first, I thought this was going to be something that might be done within quarter number 2, but I think this might be something that draws out for all of 2025. I also believe that we're not only going to recover, but we're going to actually thrive as soon as we get through this. As soon as that bull market starts, you're going to want to have been on board, because I think that thing's going to skyrocket twice as fast as ever before. And I'm not alone. Let's hear what Tom Lee has to say about the second half of 2025.
Guys, all right, Adam, just give me your assessment as you watch what is a increasingly headline-driven market.
Yeah, I mean, look, as you know, we think it's going to be choppy. I'm still optimistic that on the other side of this, we could get back toward, revenue growth and beneficiaries on the AI front with productivity and margin. So the call we've had is choppy here in the first few months. Then once the management teams understand what the policy backdrop is, they can, deploy productively capital. So I choppy first half, and then we probably get a resumption of pretty good growth.
Tom, you've tried to remain pretty optimistic through all of this. Are you still?
Yeah, I am optimistic. I can understand why investors are sitting on their hands. They don't really know how severe these tariffs are going to be, how long they are, but now we're seeing a big price correction, a decline in sentiment, and then something like today, we got a bad ADP jobs report, and the market's actually up, so we're actually rising on bad news, which is a good sign that a lot of bad news is priced in.
But do you agree with Adam that the first half of the year is likely to be a little more choppy, and that you can get through some of these issues here regarding trade, and then you look down the road to tax policy and think that, okay, well, that's going to usher in a better back half of the year?
In fact, what's just happened in the last
tax policy, excuse me.
Yeah, what happened in the last 6 weeks is essentially a bear market that has swept through sentiment and positioning, right? Because if you look at hedge fund positioning, it's gone almost neutral, and a huge correction in momentum. So I think it's very possible that March, April, May could actually be like one of these huge rally months where we're rallying 10, 15%. The
next part is the most important part, so I hope you hear this.
Investors often have to place their bets before something takes place. Is this a buy, this unsettled market that we've witnessed recently?
Yes, in my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for instance, the 10 best days added up to 21 percentage points of the S&P. X those 10 days, the market was only up 4%. So, you don't get 20% years because it's good through the year. It's just the 10 best days. I think the setup for a 10 best day is near, because if the economy's near stall speed, I think people realize the Trump put does come back, because otherwise it has to unwind all this austerity. And if the job market's soft, the Fed put comes back into play, because the Fed doesn't want to play with stall speed. And I think that's what is going to be the positive catalyst in the next couple of weeks. And on top of that, we already know stocks will bottom before bad news peaks. And so if we're seeing the market not fade on bad news, that means we're already priced in a lot of things that would scare us.
So the main thing there was that he said not to miss the 10 best trading days of the year. That means that your money can't be out of the market, because you never know when that trading day is going to be. He also said that if there's bad news and the market doesn't move, that means we're already at the bottom. And since we got some bad news yesterday and keep getting bad news and the market keeps dropping, that means we haven't hit the bottom yet. So I don't think we're there. I don't think we're at the absolute bottom, but I do think that we're trending that way and crashing so that the rates do get brought down. What you need to do is just stay put. If you're in super unnecessarily risky positions, then it's probably a smart move to get out of those, especially if you're feeling some type of anxiety right now. It's probably going to be better for you to make sure you get your money into those market average or broad market ETFs like VU or VTI, something that's going to have exposure with all different sectors and something that's just a little bit less volatile. But even more than that, this is the time you've been waiting for. I know last year when things were skyrocketing, people were telling me, I wish that I would have got in a year ago when the price was X, or when it was $20 cheaper or $50 cheaper. Well, guess what? That's where we're at right now. And most of you are just saying, oh, I'm scared, I'm just gonna keep waiting. This is the time. And I believe even more bad news is planned, which is why Trump is stringing us along in this tariffs thing for April 2nd, because more bad news can keep coming out and keep rocking the market. Overall, if the Fed does bring down rates, then that's gonna make our country's debt basically be less, or at least the payment to it be more manageable. And when rates come down, the stock market usually rises. So basically, he's seeing that long term, you can hit two birds with one stone just by getting those rates to come down. You should absolutely be in the stock market right now, dollar cost averaging, selling the news and getting rid of the FUD. Do not panic sell, especially out of good positions, good blue chip stocks, good solid ETFs that I talk about on this channel. That should just be in the portfolio. It's okay if they go down momentarily. I believe they're coming right back up in the very near future. I do believe that we're gonna see a down market for a period of 3 to 9 months or so you definitely don't need to go cash out your life savings right now and throw it into the market today. I think dollar cost averaging like normal, or maybe getting just a little extra into the market, but over the next couple of months is gonna do you just fine. I know that there's some fatigue out there for people who thought they bought the dip like a week ago and then it dipped again, and then it dipped again. So just dollar cost average like normal. This is an accumulating year, like I've been telling my Patreon and my private coaching clients. This is just a year for you to accumulate when everybody else gets scared and they pull out of the market. In 2026, when that comes around, you'll be super happy that you were the one that was investing during this time at these low prices. Because like I said before, 2026, or for sure by 2027, that stock market's gonna hit all-time highs like crazy. And so for those of us that were accumulating during this time, you're gonna get very rich because of it. These prices are a gift, so just stay strong. Watch this video on my favorite 3-fund portfolio, and not only what each of the funds are, but also the percentage of which you should have in your portfolio based on your age, because it differs the older that you get. Or watch this video to keep you going strong in your investing journey.